Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you comb the markets through the right way. Now, it is a Monday morning, a blessed Monday morning, provided for us by HFM in the spirit of 15 years providing new traders with the right platform, with the products. We are having a few giveaways that I would want us to look into before we do begin. Starting us over, when you go to the HFM website and under the promotion, we do have a few bonuses and promotions currently that are ongoing. Starting off with the Pure Gold giveaway. Once again, when you go over to the HFM website under the Pure Gold giveaway, whereby you have a chance to trade and win real gold. The promotion did begin on 8th of September. It's going to conclude on 8th of October. It's going to 9 days and counting currently at the moment, whereby you have a chance to win 10 grams of pure gold. How do you join? You go over to your HIF under promotions, join the Pure Gold giveaway, trade 100 standard lot size in gold using any account type and hit the target and win 10 grams of pure gold. Now, this promotion is going to have unlimited winners. It doesn't matter the amount of people who are going to win the targets. We also do have Battle of the Elite, whereby you have an opportunity to become Kenya's Don Wabiz, claim the crown, win 650,000 Kenyan shillings, whereby number one is going to walk home with $5,000, number two is going to walk home with $2,000, number three is going to walk home with $1,000. We are going to have 10 winners in the lucky draw, walking home each with $200. Now, how do you join? You go over to your HF under the promotions, Battle of the Elite, and join the promotion. Now, you have to open a Battle of the Elite trading account and deposit at least $100, trade any asset, and rank in the top 3 traders by percentage-wise of profit gain to win a cash prize. Once again, we are going to have 10 lucky winners in the lucky draw who are going to walk home with $200 each. Now, looking at the leaderboard currently, very interesting, whereby Nancy is at the top with 202%, meaning if Nancy did deposit $100 right now, at the moment, she has made something more than $400, which is quite achievable looking at it. And Fabian with 0.7, meaning if he did deposit $100, he has only made $0.7 and he is on the leaderboard currently at the moment. Now, we do have the virtual to real demo contest, whereby you have a chance to trade the demo account, and if you do appear on the leaderboard, we are going to credit you with $500. Now, this promotion is currently ongoing, but looking at it on the monthly perspective, it's going to end by Tuesday evening, whereby Wednesday we are going to start a new challenge whereby you have an opportunity to trade demo to live. Number one is going to walk home with $500 credited to the account under Crystal Obelisk, and number two is going to walk home with 300 credit. Number three is going to walk home with $100 credit. Now, we also do have another account that we have just released. It's called the Shield 500, whereby this account you have the opportunity to deposit anywhere between $100 to $500, and whatever losses you incur within the first 25 days, we are going to refund you the full amount up to $500. Very interesting to note. Now, let's get it on, whereby welcome once again to the morning market call. Now, today is Monday. The monthly candle has 2 more days, today and tomorrow. Then on Wednesday, we are going to begin another monthly candle, meaning we are due to anticipate NFP later on this week. But looking at the economic calendar, whereby we usually start to generate our ideas from, starting off with New Zealand dollar, they just did shift to DST on Saturday, whereby their clocks are now moved forward 1 hour, and most of the countries are going to follow suit before the end of this upcoming month, whereby today is Monday. Once again, we did have news releases from Finland. Now, Finland is an interesting country when you look at it, because it does account for less than 1.5% of the total GDP of the euro. Looking at it currently at the moment, we are coming back from lows that was created in 2023. More than 2 years exactly currently at the moment, whereby we are starting to move to the upper side. And this is what you'll want to see in an economy if you want to look at buying opportunities. Now, whenever you're looking at fundamentals, just ask yourself, is this going to enable me to buy or sell into the markets at a particular moment in time? Now, going back to the economic calendar, we did have leading economic index and coincident index coming in from Japan, whereby the data actually came out positive, better than anticipated, better than the previous number, whereby we did have 105.9 as the previous number. The data actually came in at 106.1 for the Japanese yen, meaning the economy is expanding currently at the moment. And this is what you'll want to see if you're going to look at more long opportunities on the Asia pair. Now, we are going to look into the commitment of traders in just a moment's time, whereby we will want to see how institutions did position themselves over the past week. And very interesting thing to note is that there was a lot of activity, and we're going to decipher it in just a moment's time. Now, currently at the moment, we do have Siplon speech. Now, this is a member of the European Central Bank, and this is how the data is usually presented. There is a structure into how these news releases are released into the markets, whereby during the first 3 weeks, you get majority of the news releases. Then most of the times during the end of the month, we get forward guidance from the central banks, whereby they also look at these numbers. They look at NFP numbers, employment numbers, if you're looking at it from the United States perspective. They look at consumer price index. They look at PPI numbers. They look at all of this information. And then as a result of that, they do come up with their forward guidance. Where do they see the economy generally headed to in the near future? Now, for us traders, this is important because this is going to help you align yourself with the trend. Now, the trend is your friend, whereby if institutions, if the central bank say that we are going to see a weaker economy, you'll want to look at more shorting opportunities on that specific currency. On the other hand, if the central banks do mention that, okay, the economy is headed in the right direction, this means that the trend is to the upper side, and you will want to look into more long opportunities. As a result, we do have Simple Loan speech currently at the moment, who's a member of the ECB once again. And looking at it, we would want to look at the forward guidance that the ECB does have. Now, France did recently appoint a new prime minister, and we would want to look at how this is going to affect. We have been seeing data coming in from Germany, actually coming in lesser than anticipated, and we would also want to look at their tone of how do they see the general market outlook. Now, at exactly 10, which is 17 minutes ago, we do have data coming in from Spain, whereby we have the CPI numbers coming in from the year-on-year release, whereby the previous number was 2.7. The data has actually come out positive at 3.0. And we are going to look at Euro USD and any pair that has the Euro, and see how this data has affected price action currently at the moment. Now, CPI is very, very important because it's going to look at inflation, basically how consumers are buying in a specific economy. If they are purchasing more, it means that we do have more euros in circulation, which is a good sign if you want to look at buying opportunities in the markets. Now, looking from the lows that we have come from, this was back on May this year, whereby we did see prices coming in at 1.9%, whereby we were about to enter into the threshold, the golden region, whereby the central banks will want to see inflation in between the 2 and 3%. We did see inflation start to pick up, and this was as a result of the tariffs that we have been seeing being implied on European nations from the United States of America, and data is actually coming in at 2.7. Now, 2.7 is not that bad. It's in between the threshold, once again, that the central bank will want to look at in between the 2 and 3%. Now, looking at the ECB, we'll want to look at how this data is going to affect their monetary policy outlook at the moment. Now, we do have the month-on-month release, whereby it did come out slightly negative, but looking at the year-on-year release, it tends to have a much greater impact compared to the month-on-month release. But looking at the month-on-month release, for the month of September, we have seen the data actually coming in lesser than anticipated at negative 0.4, whereas the previous number was 0.0. Now, we are going into deflationary territories currently at the moment, and we'll also want to look at the speech once again from the ECB, whereby they will want to set monetary policy in the near future, which is going to be in the next 1 hour, 11 minutes to be exact, as per the time of recording. We do have consumer credit and mortgages approval for the British pound. Now, this is very important whenever you're looking at houses, because whenever someone purchases a house, it means there's a high likelihood there's going to be a mortgage that is going to be offered. As a result of someone purchasing a house, there's going to be furniture which is going to be purchased. There are going to be middlemen who are going to broker these deals. And as a result of more houses being sold, there's a high likelihood that more money will be in circulation, which is what we are anticipating in the British region currently at the moment, which is due to come out in the next 1 hour, 11 minutes. Looking at it currently at the moment, this is 1.6 billion pounds, which is quite a significant amount of money. Looking at consumer credit, now this countries mostly are built on credit. Whenever there is more money, essentially when people borrow more, it means they're going to spend more, and as a result of that, you're going to see much more British pounds in circulation, which means you're anticipating a stronger British pound whenever you're looking at the charts. This brings me to the question whereby we have just started a segment where I would want you to engage with me. Which are some of the assets that you would want me to look into? Is it the British pound? Is it gold? Kindly put it in the comment section. I'll be glad to look into it. Now, we do have euro speech once again, the European Central Bank speech, which is going to be in the next 1 hour 40 minutes at exactly noon Nairobi time, whereby, as you can see, we do have medium impact, and we would also want to look at the forward economic outlook that the European Central Bank are going to offer for us in the near future. Now, Germany is going to release Belgium, sorry, to be exact, whereby they're going to release their CPI numbers, year-on-year release, whereby the previous number was 1.91. If the data comes out greater than 1.91, it means that, okay, inflation is moving to the upper side, which generally speaking is bad for the consumers, but it's good for the currency, whereby as a result of people consuming a lot, it means that more money will be in circulation. We don't have data currently at the moment. Now, moving over to New York session, we do have Fed Waller's speech in the next 4 hours, 9 minutes, just 30 minutes before the bell opens in New York region, and then Fed Hammack's speech. Now, looking at it once again, whenever the month is about to end, we usually get speeches from the central banks, whereby they are the biggest participants in the markets. If they are going to speak, we traders will want to listen to their tone. The tone is the most important. Are they bullish or are they bearish in the markets? Basically asking ourselves, are they hawkish or dovish currently at the moment? Now, we do have ECB lend speech once again. Look at it. This is the third speech that you're going to receive from the European Central Bank today. But later on in the day, we do have pending home sales, which once again is a very critical data whenever you're looking at the markets, pending home sales, because it does create a ripple effect in the markets once again, because as a result of people buying houses, it means that there are going to be mortgages that are going to be offered, furniture is going to be bought, there are going to be middlemen who are going to broker the sale of these houses, and as a result of one house being sold, a lot of money is going to move around. Now, if we do get a lot of pending home sales, it's going to mean that, okay, in the near future, people are preparing themselves for spending money, because as a result of the mortgages, once again, there are going to be interest rates which are offered on those houses. And if this does happen, it means that there will be more money. And as a result, if you're a technical trader and a fundamental trader, piecing this information is very critical, because when you look at the charts, it means that you need to look at more buying opportunities on the dollar. Now, later on in the week, we are going to receive NFP numbers, which is going to be exactly on Friday the 3rd, whereby we do anticipate, the previous number was 22,000. We are anticipating 39,000 jobs to be created in the United States of America. Quite interesting. If it does come out below 100,000 jobs, this will be the third time in a row whereby we are seeing NFP numbers coming well below 100,000 for the third consecutive month. Now, we have been looking at very, very poor job numbers in the United States, but at the same time, we have been seeing GDP move to the upper side in the United States, which could potentially see us moving to the upper side. But this data is going to be critical. What is the Fed Reserve going to do next in their next policy meeting, which is going to be in the next 30 something days? I do have a tool here that I usually look at. It's called the Fed Watch tool by the CMA, whereby you'll want to look at the statistics, how they usually move around, whereby if the unemployment numbers does come out lower than anticipated, it means that the Fed Reserve would consider cutting rates even further to stimulate the economy. But on the other hand, if they see job numbers stabilizing, they'll want to increase the rates as a result. And looking at it, the next FOMC meeting is going to be in the next 30 days, 10 hours and counting, as per the time of this recording. And what you'll want to look at is the graph. Let's wait for it to load. Just a moment. Interesting. Okay, as we wait for it to load, I would want us to jump over. Okay, here it is, whereby there's an 89.3% chance we might see interest rates being taken even further down to 375 to 400 basis points. Now, the current target rate is between 400 and 425. There's a 10.7% chance that we might see interest rates being held at that particular region, but the oncoming data that is supposed to be released later this week is going to have a very big effect on these numbers. What are the percentages that we are looking at? But there's a high likelihood that on 10th of December, we do have two meetings remaining for the Fed Reserve, whereby there is a 68.3% chance that we might see even rates being taken further down to 350 to 375 basis points currently at the moment. And this is data that is due to change as a result of the incoming news releases that the Fed Reserve also usually look at. Now, let's switch gears over to the Commitment of Traders report, which was updated last week on Friday, but we would also want to look at how institutions have been positioning themselves over the past week. Now, looking at metals and others and all, we want to go to the short format. Why the short format? Because this is going to give us a much more accurate data of what we are anticipating. Now, very interesting thing to note is that starting with silver under managed money, we did see institutions offload only 34 positions on longs, but at the same time, they added a lot of positions to the shorts, whereby they offloaded 1,327 short positions. Now, if institutions were selling and then they closed their short positions, it means that you anticipate the metal to move to the upper side, where for institutions to sell, they have to look at an equal amount of buyers. Now, if they do offload short positions once again at the same time, you do anticipate the precious metal, which is silver, this particular moment in time, to move to the upper side. Now, looking at gold under managed money, we saw institutions add 3,475 net long positions. Looking at it currently at the moment, the net positions is 198,826 net long positions, and they added more buying opportunities, while at the same time they added a few short opportunities at the same time. Almost 1,901 short positions were added to the precious metal. Very interesting to note how this is going to affect price action, and we are going to look at it in the next 3 minutes or so. Before we go over there, I would want us to look at the financials, whereby starting with the Canadian dollar and the asset managers, whereby we did see institutions add a lot of short positions to the Canadian dollar, meaning institutions ever since 16th of September till 23rd of September, institutions favored selling the Canadian dollar, while at the same time they just offloaded 19 positions on the net long positions, meaning institutions look to sell more Canadian dollars over the past week. And could this trend move over into the near future? Only one way to find out. Now, looking at the Swiss franc, last week they did hold the SNB, the Swiss National Bank, did hold their interest rates at flat rate, whereby they did have it at 0%. Now, looking at the institutions, they digested this data positively, whereby they wanted to sell more Swiss franc because, technically speaking, more capital is going to move outside of the country. Looking at it currently at the moment, we have 41,883 net short positions, and institutions are favoring selling more of the Swiss franc currently at the moment. Now, looking at the British pound, under the net longs and the net short positions, we can see that there are more short opportunities, more short contracts on the British pound compared to long opportunities. And looking at it, there's 1,562 short positions being added to British pound, while at the same time they offloaded only 349 net long positions, meaning institutions are favoring selling the British pound currently at the moment. Now, looking at the Japanese yen, very interesting. We do have 110,298 net long positions, while at the same time they only have 32,464 net short positions. But looking at it, they did add more than 8,173 net long positions, meaning institutions are favoring buying the Japanese yen compared to selling the Japanese yen. Looking at the euro, which is going to be the final asset we are going to look at in the Commitment of Traders, whereby institutions added 4,900 net long positions, while at the same time they did offload only 19 positions. That's going to be for the data. Now, I want us to switch over to technical analysis. This is whereby I would want you to engage with me. Which are some of the assets that you would want me to look into? Let me share my MetaTrader. Beautiful. Somari, thank you for being the first one to join. Do you hire people to trade for you? I don't believe so. We just offer you the platform, USD Canadian dollar. Okay, so just buy USD card. Now, looking at the commitment of traders once again, institutions have been favoring selling the Canadian dollar ever since 16th of September till 23rd of September. We did see institutions add 3,000 positions on shorts. So from 16th, where are you, darling? Here. Now look at this, beautiful, beautiful. Ever since these laws were created, we did see institutions starting to sell the Canadian dollar. Now, if you're looking at USD Canadian dollar and institutions are selling the Canadian dollar, it means the USD is going to be stronger. And as a result of this information, we did see prices move to the upper side, whereby we did have a change in character, whereby this high broke the most recent lower high around this region, and then prices retraced to the downside. This low failed to break the most recent low, and then prices continued moving further to the upper side. Now, looking at it currently at the moment, ever since Asian did open, prices moved slightly to the upper side. We are now trading below the Asian open, which is interesting because once again, look at it from this perspective. We are looking at the weekly candle. This weekly candlestick is going to have just 2 days for it to print, then close, which is going to be the monthly close of this candlestick. As a trader, you'll want to be very careful because the next monthly candlestick that is going to open, there's a high likelihood it's either going to form a low or a high, and that is going to be a lot of volatility. But at the moment, we do have support forming around this region, whereby once again, ever since Asian open, we did see prices rally to the downside, but you did hit a region of support whereby for the past 5 hours prices has been failing to break below this region. If this candlestick closes bullish, there's a high likelihood that prices will continue moving further to the upper side as a result of the underlying trend of the market. Now, looking at USD Canadian dollar, once again, it's going to be dependent on the data that is going to come out, but looking at it as a result of the commitment of traders, we have been seeing institutions offload a lot of positions on the Canadian dollar, and I do anticipate prices to continue moving further to the upper side. If you do break above these candlesticks opening price, there's a high likelihood prices will continue moving to 1.39559, which is a very, very likely target for us to hit in the markets during this period in time, whereby that's more than 35 pips away. Very interesting. That's a good tradable range whenever you're looking at it on the markets. But on the other hand, if you do get a candlestick that closes below this region of support, it means that there's a likelihood prices will come back down to fill these regions of inefficiencies that are residing below this region. Only now, as a trader, we do react to prices. Now, 21 Forester, BTC USD, there's still a bill in parliament, whereby at the moment, BTC is going, I'm going to sideline it for a minute, just a minute, until parliament decide on where they would want us to go with the crypto markets. Currently, at the moment, we are not regulated to talk about Bitcoin. Hello, Nyaga. How do I connect HFM account to my MT5 PC? Beautiful question. How do you connect your HFM account to MetaTrader? Now, when you get your details, you need three data. The first one is going to be the server. Whenever you open an account, it's going to specify the server, whereby it's either going to be demo or live, and then there's going to be the server name. Okay. Now, you need to ensure you have the correct server name. You need to ensure you have the correct login number and then the password. Now, when you come here, you go over to File, then Login to Trade Account, okay? So you go to File, download MetaTrader 5 from our website, whereby if you go to HFM under the platforms, we do have all of the links to download the platforms, then Login to Trade Account. It's going to pull up this tab over here, whereby you input your login number, specify your password, then ensure the server, okay? So for us Kenyans, it's either Live 2 or Demo 2 for MetaTrader 5. If you're using MetaTrader 4, it's going to be Live 8 or Demo 8, but always ensure that you have the correct server. Beautiful. Euro Euro, I do believe, Dero, you're talking about Euro USD and GBP USD. Okay. So Euro dollar. Where are you? Here is Euro USD. Let's go over to a higher time frame. Let's zoom out to the chart slightly. Looking at the commitment of traders, starting off with where institutions did leave us, we did see institutions add zero. Okay, we did see institutions buy into the euro. 4,900 positions being added ever since 16th of September till 23rd of September. But actually, we saw the United States dollar gain as a result. Now, look at this specific price action here. This was when the Fed Reserve did decide to cut interest rates most recently, whereby prices spiked to the upper side. Then we had a massive downturn. And this was the result of Fed Chair Jerome Powell speaking of this is going to be a risk management cut. And we don't anticipate aggressive cuts like we would have thought it will happen. And as a result, prices moved to the downside, started forming new lower lows, lower highs. We did hit a region of support. The markets retraced. But most important thing to note is that this high failed to break the most recent highs, and then we had massive momentum to the downside. This was when GDP numbers, this massive move to the downside here, whereby GDP numbers came in positive for the United States, and we saw institutions look at these numbers positively, whereby the dollar did gain strength. Currently, at the moment, we are retracing into that region, and I would want to see if we do get resistance forming around this particular region. Here, as you can see, we do have candlesticks that are trying to break to the upper side, but currently at the moment we have signs of bears coming into the markets. Could this be a breakout where the markets did break out from the most recent region of support? Now, whenever support is broken, it becomes what? It becomes resistance. Markets retraced into the upper side. If you do get signs of buyers coming into the markets, whereby this candle closes well below this region, there's a high likelihood that prices will continue moving further to the downside. Looking at institutions, yes, they did favor buying into the euro, but the United States dollar currently at the moment is anticipated to be stronger as a result of the political tensions that are currently on euro region. Now, looking at GBP USD, British pound against the dollar, similar instance which is happening currently at the moment, whereby we did have this massive bearish momentum to the downside on Thursday as a result of the GDP numbers coming in positive for the United States dollar on the quarter, for the second quarter of the year, and then prices are currently retracing into that region. Once again, support was broken and it has become resistance. If we do get candlesticks that fail to close above this region. Now look at this interesting piece of price action here, whereby this opening candlestick coincides with exactly the candlestick that is forming currently at the moment. Now it is London open currently at the moment, and it has come back to retest the opening price of Thursday just when we had the GDP numbers being released. If we do have this candlestick the same way, closing below this region, as we have seen on Euro USD, I would want to look at more selling opportunities to the downside, possibly coming back to the opening prices of today's Asian Open. Now, looking at it, if this is something I would want us to let me pull this here for you to get an understanding of how candlesticks do form. So let me start with a clean page. If I'm anticipating a bearish candle to form, remember it's a chart of price against time, okay? So it's a chart of price against time. Let's say this is on the weekly perspective, meaning this is going to be Monday, this is going to be Friday. If I'm anticipating a bearish candle to form, I'm anticipating a candlestick of this nature, whereby it's going to have the opening price is going to be higher, the closing price is going to be lower. I'm anticipating this candlestick to form. If Monday does open, moves to the upper side to form a high, and then starts rejecting this high, I'm asking myself, what are the probabilities that this candlestick will flip bearish, this body that has not yet formed, before does what? Before Friday does reach. But looking at it on this weekly perspective, this week is going to only be today and tomorrow. So this could be a very likely pattern that will form in the markets before the week does conclude. Now, Marshall Kungu, thank you for the follow. Hello, Polly. How are you? Are there any questions from East Africa? Okay, that's going to be it for me. Thank you. Stay safe. I would want to wish you a peaceful week ahead. Risk management is going to be very crucial. Once again, we do have the Shield 500 accounts that we are offering currently at the moment, whereby if you do deposit anywhere between $100 and $500, whatever losses you incur within the first 25 days, we are going to refund you up to $500. Once again, take care of yourself, stay safe. I shall see you in the next session.